Market terminology. So you need to know in trading, there's a lot of ways to say things, and you must understand them because, for instance, I use them all the time, and every trader uses them, so you need to understand them. So that's what we're going to see quickly. So first of all, the difference between bullish and bearish, very important. Bullish simply is something going up, bearish is something going down. So if we look at that move, we can see it's a bearish move, it goes down. If we look at that move, it's a bullish move. We could look at it in candles also. That's a bearish candle, the red one. The next one is a bullish candle. So you know when it's a bullish trend, it's a trend that's going up. Bearish trend, it's the opposite. So then you've got a position. A position is basically a trade. When we enter a trade, we're basically entering a position. Then there's the difference between long and short. So going long is basically buying a currency pair. Going short is selling a currency pair. However, if you, let's say I buy here and sell it there to take my profit, I wouldn't say I shorted it here. I said I just took profit. If you short it here though, is you're really putting money for it to go down. So many people don't really understand that notion. It's nothing really to understand. It's just you can do both in trading Forex. You could either, let's look at it, you see going long. Here we're going long. So we're buying this to go up. And we could either go short. So literally sell this. So going short, I'm basically buying Australian dollars by selling my euros. Simple. And it's not a difficult transaction. It's basically put buy or sell. It's basically betting on the side of the market. That's going long and going short. Then you've got the difference between stop loss and limit. So when you enter a trade, enter a position, we will always use a stop loss and a limit. So a stop loss is basically a level that you think the price, if your price reaches your stop, you want the order to get you out of the market because you think you're wrong. So it's really important to manage risk and keep our losses small. So what I mean by that is, let's say you bought this here and your stop loss is the red. So let's put the stop loss here and you were targeting that level. However, you bought, the price went down. If you had a stop loss here, it would get you out and you would lose that amount. Calculated. If you had no stop loss, you would have bought. Next morning, you could have wake up with that loss, massive loss. So that's a stop loss. It's to prevent us losing too much money. Then a limit is basically the opposite. And then it's an order that will allow us to take profit at a certain level. So let's say I bought here, my stop loss and my target, I was targeting that yellow level. We can see it was reached a few times. So I think, oh, I'm going to buy this and I want to sell it and take my profit here. Well, instead of waiting in front of my computer for it to reach that level, I'll just put my target here. Target or limit, it's got different names. We'll put it here. So the market will take us out and take our profit automatically at that level. So that's a stop loss and a take profit, a limit. Then there's basically a main difference between a market execution and an entry order. So a market execution is basically you see something, you click the buy button and it buys automatically, you're on the trade. An entry order, however, is an order that you want to buy that currency or sell it at a certain price, which is not the current price. So let's say I want to short Euro Aussie, so this currency pair, but I want to sell it only at 1.61. So up here, we can see currently it's 1.58. So I want to sell it over there. And let's say I was targeting down here. So that's my plan. So however, I'm not going to stay in front of my computer waiting for the price to reach here and like be there at the right time. So I'm going to put an entry order, what we call. And there's basically two different types of entry orders. There's stop orders and limit orders. So that will explain you basically the difference. The buy stop is an order placed above the price and price keeps going up. So that's not our case. That would be if we put an entry order here and the price to continue. So take note of that. And so basically in this example, this would be a sell limit because the order placed above the price, and price then goes down. So that's what we want the price to do. We want the price to simply go up, reach our entry sell limit, and then make its way back down. So these are the main market terminologies that you really need to know in order to understand when people speak about Forex and to understand basically the whole course.